Welcome to the latest update on the Bitcoin market cycles. Today, we are uncovering a critical shift in the long-term trend. The February low at $59,930 has officially been marked as a high-confidence 18-month cycle bottom. But don't get comfortable just yet. While we are starting a new series of cycles, the overall market remains firmly within a 54-month bear phase. In this video, we will break down the phasing from the macro 18-month view all the way down to the micro 40-day fluctuations to find your next trading edge. Let's look at the charts. Before we dive into the cycles, please take a moment to review the financial disclaimer on your screen. This analysis is for educational purposes only. The 18-month cycle. During my last update, I mentioned the possibility that the $126,272 high could be the 54-month cycle peak, provided the Bitcoin market confirms the cycle trend line or VTL crossing. Additionally, the low for the current 18-month cycle is expected to occur in February 2026. By trading below the VTL for the past 3 months, the Bitcoin market confirms that the October 2025 high is at least the 54-month cycle peak, and it may even represent the peak of a significantly longer cycle. Time-wise, if the February $59,930 low is indeed the 18-month cycle low, then Bitcoin formed its low right on the projected time target. This occurred exactly 18 months since the last 18-month cycle low in August 2024, closely matching the 18.93-month duration from the Hurst nominal model. Furthermore, the average of the last 3 18-month cycles stands at 17.6 months. Since we are currently in a bear market, and in bear markets, cycles have a tendency to run a little bit longer than the Hurst nominal model. Even if there is the possibility of the 18-month cycle extending slightly, we can label the February low as the 18-month cycle low with a very high degree of confidence. For the rest of this analysis, let's assume the February low was the 18-month low. If it does extend, we will simply need to move our labeling forward accordingly. Price-wise, with a $59,930 low in February, the Bitcoin market met and even exceeded its downside target. What to expect next? We are starting a new 18-month cycle. Therefore, we can expect the market to rally toward its cycle line, the yellow line, without crossing it, instead using it as a level of resistance. Following this, it should resume its decline on its way to forming the third and final 18-month cycle of this 54-month cycle, which is expected to form around August and September 2027. In a balanced market, the peak should typically form around November 2026. However, since the Bitcoin market is currently in the final phase of the 54-month cycle, there is the possibility that Bitcoin forms its peak earlier, on the left part of the cycle. We also have to monitor the white cycle line, the 54-month FLD, to see if the market will find support on it or will cross below it. In the event that Bitcoin crosses below this line, it will trigger another significant downside target. But this is for the very long-term picture. For now, let's focus on the shorter-term cycles by analyzing the 40-week cycle first. Due to the Hurst rule of synchronicity, if the February low is the 18-month cycle low, it is also the low of all the shorter cycles, meaning we will start an entirely new series of cycles starting from a February low. On the Hurst nominal model, the 40-week cycle has an average length of 38.97 weeks. Since Bitcoin is in a bear market, the cycle has a tendency to be a little bit longer. We can estimate that the next 40-week cycle will have an average length between 39 and 41 weeks, which would give the possibility of forming its low during mid-November, while the peak can be expected around May. The peak could find resistance on its cycle line, the blue line, then resume its decline to form its low. If Bitcoin remains below its cycle line during the peak formation, then we can expect further decline. However, if the peak occurs above the cycle line, this will trigger a potential upside target, giving a little bit of hope on the bullish side for very short-term traders. The cycle line will be around $87,000. If Bitcoin crosses this point, it will give a potential target of $114,000. But again, to trigger this target, Bitcoin has to cross above its cycle line, and depending on the total amount of bearishness, it is even possible that Bitcoin won't even meet its target. For now, we remain in the bearish scenario, where the most likely scenario is that Bitcoin finds resistance on its cycle line, the FLD. If you're finding this Hurst cycle breakdown helpful, make sure to hit the subscribe button and click the bell icon. We release these technical updates every week to help you navigate the Bitcoin cycles with precision. The 20-week cycle. Assuming the February low is the 20-week low, the next one is scheduled for the middle of June. The peak should form during the next 2 weeks, and this peak should be very close to its cycle line, using it as resistance without crossing above it before resuming its decline into the middle of June. The second scenario is that the peak may have already formed on the 2nd of March when Bitcoin formed a $76,013 peak. Knowing where the peak will form comparatively to the cycle peak is crucial information for the future trend. Indeed, if the peak already occurred on the 2nd week of March, and since the peak formed on the left part of the cycle, this will be a very bearish signal for Bitcoin. In a balanced market, even in a bear trend, after an 18-month cycle low formation, the market should cross above its cycle line, providing a potential short-term target. Very often, however, the market misses its target. Since its February low, the Bitcoin market has moved sideways, which reinforces this second, more bearish scenario. The 80-day cycle. Since the February 6th low, Bitcoin crossed above its cycle line on March 13th at $70,700, providing $81,470 as a target. With a $76,013 high on March 17th, the market missed its target, which is usually a bearish sign. However, the target remains valid until the Bitcoin market crosses below its cycle line without meeting its target. If that does happen, it will be very bearish for the market, and we can expect a further sharp decline. The $76,013 high is the 80-day peak, and we expect the low to form on April 17th. The very important question is where the 80-day cycle low will form comparatively to its cycle line. Technically, after an 18-month cycle formation, the first 80-day cycle low should find support on its cycle line, then rebound on its way to forming its second 80-day peak before resuming its decline to form the second 80-day low, which will be, by the Hurst principle of synchronization, the 20-week low. If the market forms its second peak above its cycle line during the second 80-day cycle low formation, the market should then cross below its cycle line, providing a downside target for the next 20-week cycle around mid-June. The 40-day cycle. Let's analyze the 40-day cycle now. Since the February low, we have already seen 2 trading signals on the 40-day cycle. The first one was when Bitcoin crossed above its cycle line at $68,600 on March 2nd, providing a $77,720 potential upside target. The March 17th high missed this target by $1,257, or 1.6%, which is close to the 1% margin of error, but close enough to state that the market missed its first target. This is a bearish sign, especially as Bitcoin crossed below its cycle line on March 27th at $67,500, providing a potential downside target at $59,000. Note that this 40-day target is slightly below the $59,930 February low. The last 40-day low was on March 21st and found support on its cycle line. From there, we expected the market to rebound and maybe meet its upside target, but Bitcoin instead traded along its cycle line. This is not a bullish development, as it means the market does not have enough steam to push the prices higher. What happens next? The 40-day low is expected to form between the 2nd and 3rd week of April. After forming this low, Bitcoin should technically cross back above its cycle and provide a new upside target. In conclusion, to summarize, while the February low provides a temporary floor, the failure to reach upside targets in the shorter cycles suggests that bearish pressure is still dominant. We are watching the mid-April window very closely for the next 40-day low formation. If Bitcoin remains capped by its cycle lines, the probability of an accelerated decline increases. Manage your risk. Stay disciplined with the cycles, and let the market prove its strength before shifting your bias. For the full written analysis, and to see the high-resolution versions of these charts, visit tradingmarketcycles.com. Don't forget to like this video if you want more technical content like this. See you in the next update.